TMT stock market strategy video for Wednesday, April 6th. Well, we did get a nice little push lower yesterday. Gold actually rallied on that safe haven trade along with bonds. We need to know where we're going here, right? Where are we? Where's this market headed? Well, I do think, as you guys all mentioned, I've been saying for a while, the next path of least resistance is lower, not up. That's in the equity markets. I also believe that gold is going to head lower too. And you say, well, wait a minute, Mark, how can that be when you have that safe haven trade? Well, it's just a matter of timing, basically. And I'm going to just briefly touch on gold today with the dollar, but I'm going to put out a special video on gold in itself. So I'll be working on that in the next day or so. So look out for that on StockTwits and of course in your inbox. Let's take a look at UUP. One of the reasons why I do think that the gold and silver, precious metals for that matter, is going to head lower at least one more time. We have the dollar. Here's the UUP ETF, the dollar ETF. And you can see here we're in major support. I've showed this to you on the weekend video. You could see here, and even if it breached, I do believe that it would go back up again. That's usually how it works. You have a nice, let me just get that out of the way first. Just want to show you a nice bullish pattern here. A real nice bullish fallen wedge. You could see here, and usually we break to the upside, back test, and then move higher again. So a nice big bullish fallen wedge at big support. That's going to put pressure on gold in itself. Remember, gold rallied on the dovish comments on Janet Yellen. Today we have FOMC minutes, so we'll see how that happens. It looks more likely that gold will probably sell off into the minutes because of the fact, obviously, people don't want to hold a big position like that going into a risk event. So that's one of the reasons why. Next, we have just a seasonality trade. We're coming in. Usually, gold catches a real big bid going into July through September. Right now, that's not the case, and we did rally pretty hard the last 7 weeks in gold. Let's take a look at the gold GLD. You can see here momentum indicators. Our RSI and our MACDs are moving lower. You can see that clearly here, and we have some negative divergence. You can see that price is kind of holding up pretty well. But also, I wanted to show you is let me just kind of draw that. Let me get that out of the way. All right, let me open this chart up for you guys. And I mentioned this to you the last time. We have a pretty well-defined head and shoulders pattern here, right? Left shoulder, right shoulder, neckline coming right up into that 50-day moving average. If we lose that 115.48 in the GLD, I would say look for the 200-day moving average, and then we'll put some fib targets down below and look for a spot to buy gold. Because I do think once we shake out all the week longs, I do think that we pretty much should be good to go to the downside. All right, so this is where I stand in gold. I do think gold does go a little bit lower before it goes up. GDX, same thing. Big move up in the miners, the gold mining index GDX ETF. And I'm just, if you look at the area here, you can see that you're into a big cluster of resistance. And again, head and shoulders pattern here. Let me just get that out. You can go to this guy. There we go. And there's that head and shoulders pattern with the neckline coming in right here at $19. We lose the 19, then you could see pretty much, I would say, a good move to 1845. But again, we'll put some fib targets out there for you guys to kind of get a good idea of where we are. That's going to be a big area of support right here, that big band of support from below. I don't believe it'll get that far, maybe down here, down at the 200, okay? Let's take a look at the indexes. Again, looking for lower prices. You're in this area of supply. We talked about this already. You'll see I mentioned it many times. And you're coming in here, and we're 22 PE forward earnings, guys. 22. That means that earnings have to be a huge beat in order for us to move higher. We're basically fairly valued right now in the S&P. I don't suspect us moving any higher unless there's something crazy that's coming out with the Fed or something to induce another rally. I don't suspect that. I suspect the markets go lower first and retrace some of that move from February. And also, we had an inside track, how the institutions, what they're doing. Bank of America put out a poll yesterday, or I believe it was yesterday or the day before, and they mentioned that their institutional clients have been selling into this rally for the last 8 weeks. So that's not a good sign as well when you have institutions that don't believe this rally is actually going to go higher. Okay, so be careful. So all I'm saying is be careful out there. All right, diamonds. You can see the Dow Jones had a nice big run. One of our laggards leading, also not a very good sign. Okay, transports here now back below the 200, not a good sign at all. It is deemed our leader. You could see here break below the 200, and now we're back below this downtrend line, so that's not a good sign as well. So I do suspect some of this move will get retraced. We don't know about how far. I would say at least 50% of this move, if not lower, and then we would reevaluate the move. The pullback, if sometimes pullback they turn into full-fledged corrections. All right, and Qs. Lastly is the Qs. You could see here a nice big bearish rising wedge, still within the wedge, so we still have a bullish. It's still bullish, only bearish when it breaks the lower end of the wedge. So just keep that in mind for today. All right, guys, be careful out there. FOMC minutes come out at 2 o'clock Eastern time. So keep your eyes straight. Be focused here. Make sure you use your stops. And we'll see you tomorrow. Take care, everybody.